Okay. It's I can't wait for it. And today was the weekly recap, and we're just gonna go over some of the plays and some of the calls that I made for the week, and just kind of see where we would have been and where we ended up if we actually listened to it and followed what I was doing. And not saying that I'm a financial advisor or that you should take any advice from me because I'm not a professional. But if you did take a look at some of these stocks and saw that they were a good play, this is what you would have found. Now, this is just one of my accounts. I have another account, and I cashed in, and so I've quadrupled my account since inception. And it's not really big. I started off with an extremely small amount because I come out of a situation that is too long to explain in this episode. So, um, either way, let's just say I started off with an extremely small amount, and I've been making option calls now for about 2 months, and this is what I've ended up with. And whenever you have an extremely small account, you can only play some riskier stocks, and so you kind of have to play it kind of close, if you will. So, anyways, moving on. Let's get over to my other screen here, and this is what we're looking at here. This is one of the predictions I have coming into the week, but that's not what today is. We'll get back to that a little bit later. Um, I want to look at my ideas page. And so when I take a look at some of the calls I've made and some of the plays I've been in for the last week, I want to show you where they ended up and where I had them predicted to be. And so first I want to start off with my earliest energy transfer, CWK and RRR. So here's CWK. All right, so CWK, and before we get into any of this is what I'd like to say. My trend lines aren't the be all and end all. Like, you don't see these and say just jump right in. That's not how this works. What we do is we wait for the price action to respect the trend line before we start jumping in on this. And by respect, I mean it's going to come down and hit this support line down here, and it might even go through it, but it wicks back up, or it starts to shrink back up and solidify on the other side of this trend line. If it does go through it, it comes back up and breaks through this trend line, and then solidifies back on top of it and starts either wicks through it and then comes back up, or stops directly on it and bounces off of it. And so we're looking for the candle going up away from it before we make our decision to get in, or we look for the candle that's breaking through and wicking back and stopping just on the other side of that trend line. And so those are the things that we're looking for to make use of this trend line, not to just look at the trend line and say, hey, this is going up, I'm jumping in. That's stupid. Don't do that. So my goal is to kind of give you some guidance and say, hey, this is what I see in the market. Now, just to give you a quick synapse, if you're just joining in, I can't wait for it. You can Google me on Google. You can look up WECT Scott Mel, and you'll give it a news article about my condition. I have acquired savant syndrome, and I had a traumatic brain injury about 6 years ago. I got hit at 70 miles per hour from behind, gave me 11 staples in the back of my head. They didn't scan for any kind of damage. It sent me on with my life. 4 months went by. I went to sleep one night, woke up the next day, lost who I was. Had a whole pile of doo-doo to deal with when I woke up that day because I didn't understand what was going on, where I was. I mean, I remember everything, but I don't remember the ownership of doing all those decisions that I had to get to where I was. And so it was a very confusing time, and it's really hard to explain. I can get into that to another time, but long story short, I had a huge desire to want to paint, and so I couldn't draw or paint before the wreck, and I bought some art supplies, started painting in the middle of the night, and lo and behold, I can paint portraits near realism on a large scale. And where I couldn't draw a face to save my life before that. And so now And what I used to thought was just art was my thing, and so I was just kind of really lost because my financial situation just went straight down the drain, and I was it was tough because my whole life was built around being a manager in the car business, and so I was making, six figures, and I was making good money for my age at the time, and I was exactly where I thought I wanted to be. But when I came out of that, woke up that one day, I, I didn't want any of it, and my brain wouldn't let me work in the car business. I can do the work, but it would shut down on me. It would just wouldn't do it. And it's just another long story I can explain another time. If you ask, put it in the comments below. I'll be glad to do a video about it, about any of this. I'm an open book. I don't have anything to hide. I just want to help people. That's one of my goals. Do my art, tell my story, and help people. And so, but before I could do any of that, I started running into the problem with I had a financial situation that was horrible. And I hit rock bottom and bounced three times. Three times. I was in the deepest, darkest hole that anybody could possibly dig. If you think you know despair, you have no idea. I lived it. I am despair. I mean, I'm so tired of eating humble pie that I've gained 10 pounds right here. And I used to work out twice a day. But another thing that came out of my wreck was one, the physical inability to do it like I used to, and two, the lack of desire to want to keep doing that. I was a different person when I came out of that, when I woke up that day. So I had a lot of things on my plate that I had to deal with, and financial situation was one of them. So I started looking at stocks, and I was never good at them before, but I had this thing with the acquired savant syndrome. It kind of speaks to me in a weird way, and so it tells me things. And so if I'm paying attention and open enough to see what it's telling me, then I might run into things that actually might benefit me. And so art was one of them. And where we thought that's where it ended, I kept an open mind and was paying attention to everything it was doing and how it felt whenever something kind of happened. Spray painting was another thing. I did a mural on the side of a building that was 50 foot by 50 foot. And then I started looking at the charts, and my third month at looking at charts, I ran into something, and I saw something that spoke to me, and I knew right then it was really important, and that most people probably didn't see it, but to me, I correlated it with institutional buying right off the bat. And I had no idea what that was, but I knew it was institutional buying, and it was the path that they were going, and so. Fast forward 8 months, into looking at stocks. I never looked at anybody's teachings or kind of let them sway me in any way. I only looked at the charts and made my own rules and my own decisions on what the market was trying to tell me. And so then about 2 months ago, I opened the door to looking at some other teachings, and I finally found something called Wyckoff schematics, and it was the missing piece of the puzzle. It was the logical explanation of what was going on in the market that explained what I saw visually my third month trading. So now back to the whole reason why we're here today. We're doing a weekly recap, and I'm going to show you some of the stocks that I've played and some of the calls that I made and where they panned out. And so now, if you're not following me on TradingView, it's free. If you're listening to Joe Blow down there talking about this, that, and another, and he's got mixed, results going up and down, and maybe you're eluding yourself thinking that you've got it understood and you got it locked down and you're in a good spot or whatever, but your weekly numbers aren't really, showing it. Please take a piece of my humble pie and take a bite. Eat the pie, because I don't want it anymore. But here, I'm going to show you what I did for the last week, and then you can make your decision based off of that. This is CWK, Cushman and Wakefield, and they were the Energy Star Partner of the Year. Let me back this up so you can see it. Boom. Nominated Energy Star Partner of the Year. Profit margin is $1.75 billion for the year so far. we've for the year, we've not even made it to the halfway point of this year, and the estimated value is $3.75 billion. So they've got the whole other half of the year plus the remaining 2 months of this middle part of the year. And, unless they just completely go into hibernation mode for the fall, I think they're going to blow this thing out of the water. And so, this is really undervalued. I see the stock going to the moon. And, here's the path that I plotted for it. And so here's the great thing about TradingView. If you follow me on TradingView, you can go to my ideas section and you can see all the charts that I plotted. And there's a little play button right here. You hit the play button, it spins like that. Next thing you know, it shows you the rest of the chart, what happened after the prediction was made. And if you're not going to your favorite people and looking at what their charting is doing, and if they're not doing this and you're not asking them to go on TradingView and do this so you can follow where their predictions were, because anybody can say anything, you're not going to remember half the stuff that they say. You're just going to say, he said it went up, but did it go up? Did you forget to check back to see? You just like his energy and you keep going back to look to see whether or not, what he's going to say next and just hope that he's going to be right someday? Or are you actually checking up to see if they're actually being right? So here, this stock, I made the prediction that was going to go up. And like I said, we wait for it to bounce off the trend line or hit it and wick back up and stop back inside before we get in. And so here it is. It gapped over the trend line, bled through it, and that's okay. Like I said, we just wait for it to come back. Comes back up, makes it past this trend line, comes back, checks the support now. Checks it right there. That's your entry. When you see this red candle stop right here and this green candle grow, I got in back here because I knew it was going to go up. I wasn't worried about it. I think I got in down when it was underneath here or something. But it checks it right there and then shoots this green candle. So even if you got in right here at 1745, you'd be riding it up to 1865 right now, hitting all-time highs, getting ready to hit 19. I got it in the money. And so it's been printing ever since. I saw this. I saw this after I was already had spent most of my money. I sold off a couple of things and I got 4 option calls on this. Well, after this run up right here, I sold 2 of my option calls to break even on this play. And now I'm sitting on 2 option calls to see if this thing's going to keep going. It might come back down and then go back up. I'm not really sure. I might need to redo this chart because this movement right here is probably this right here. And so this is the thing with the charts is this. And I know this is going to run a little long and I'm sorry, but I want to explain everything so that way you can understand and see how I see it. So now when I draw these trend lines, they are not absolute in time because I'm not Nostradamus and I can't predict the future. But what I can say is I do know a thing or two about what the price movement is going to do. And I do see things and I hear things. I like to say that I hear things. Maybe I do, maybe I don't. I don't know. It's a secret. Shh. But when I see this is telling me that my prediction is just slightly too forward. This curving action right here, this pull back down that dips down into this area of liquidity right here is what this is right here. This curve action right here that dips down into liquidity right here. Boom. Is that move. That is that move right there. I'm just too far ahead. All right, so fast forward into the future, pull this back into the past, and now your present day is right here. And now this slight curving movement going up is this right here. So just because this is extended, now for the same reason this is extended, you have to take into account that this is extended as well. And so therefore, it is very plausible that this right here, this movement is this slow movement curve going up right here. And so we are actually right here in this prediction, and there's just nothing but blue skies from there. And so just keep that in mind when you look at my predictions, that I can't predict time, I can just predict path. And you have to look at it in a means of, this could possibly be that. Now it could hit this area right here and come crashing down, then go back up. I really don't think so, but it could. All right, so let's move on to the next one. So you were sitting in this one right here, you would have been up, what is it? Easily 200% on all your option calls if you cast them all out. Let's just say 200. That was probably about right, 200. And then if we go to, so that's CWK. So this is energy transfer. This is one of my favorite ones, and all three of these are bangers. I mean, just absolute bangers. And if you looked at the earnings that came out with them right now, they are actually all better than expected on their earnings. And I played them through the earnings. Everyone says don't play it through the earnings. I played all three of these through the earnings because they were all bangers. And I knew that they were undervalued, and it didn't matter because they were just going to go up. And so don't listen to people. If you believe in a stock enough that like you have proof that it's going up, don't listen to people. So energy transfer, when I get in on this play, it was at $6.80 or something like that, or $7.40. I guess it was somewhere around like $7.80. So now I hit play on this right here. I saw that this was going to come up, hit 880, which is this first price line here, which is going to be an area of resistance as it goes up. So it's going to have problems getting through this 880. Then it was going to come back down right here and then push back up, find support on top of 880, and then bounce off and go back long and try to go for the 958, and then do the exact same thing, maybe find some issues getting past 958, then come back down a little bit and then bounce up and come up and try to make support of 958. And so that said, let's hit play and see where you would have ended up if you had started playing down here at the 780 mark. Now ET has bought ENBL, and what that means to you is that ENBL was extremely undervalued, but they were net valued at $2.7 billion. And ET did some digging in there after the rumors started surfacing. And now, just so you know, ET is the largest pipeline in the United States, which means that they're the largest energy company in the United States. And so they just bought ENBL for $7 billion, which means that ENBL has to double in price because they're valued at $7 billion. Their net value used to be 2.7, so it's going to be more than doubling their price. That's a given. Whether ET and ENBL continue their merger, it doesn't matter because they are valued at $7 billion now. And so that is supposed to finalize in late July. And so now ET's value should double as well, because now we're taking the profits of ENBL and putting them with the profits of ET. And so now you can see where this is going. ET is extremely undervalued now because by the end of the year, they're going to be showing profits, adding to their numbers. And so now they should be up double as well. So easily should get up to $15. But even on the low end, $12 should be an easy mark for them. Sure. Let me pause this. Be right back. All right, it's Mother's Day tomorrow. By the way, I totally forgot. So sorry for the interruption there, but that needed to be done. So um, so yeah, ET's value is going to be easily $12. So now if you look at this chart after I've hit play, you can take a look at it right here. You can see that it came up, it dropped down, and so again, if you just move this back right here, this is the drop down into liquidity after hitting this support area of 880 that it couldn't get through. So it's resistance here, drops down, gathers momentum, pops back up above 880, comes back, wicks down, puts support, uses it as support at the 880 mark, bounces up, goes long, comes past 958, comes back, wicks down, hits 958, finds support, goes back up again. I'm not making this stuff up. You know, it it's it's just doing it. Okay, so um so if you had played this one, now I was in this one for 10 contracts, option calls on it, and these are stupid cheap. I mean, stupid cheap. You know, like I'm talking 15 cents per option call. Now, so I spent $150 to get 10 option calls on ENBL. It's sitting at, I mean, $700 or something like that. Sitting at $700 on 10 option calls. I sold 5 of them. I'm still sitting in on 5 of them because this thing is still going to go. And so my thing is that these calls end on May 21st. So I want to make sure that I'm out of these calls before my internet dropped. But I'm just going to continue going because it's still recording. I'm going to post this as a recording. So you want to be in on, if it's ending on May 21st, you want to start looking for your exit somewhere starting around 2 weeks before the end of that call. You don't want to be in this normally on the last week of your option call because that's when the market makers like to drag this thing down. So I got in on this a month ago from today, and so I've been riding this for a month, waiting for it to get into fruition and start moving. And so it was really slow moving right in this area right here. And then it came down a little bit and then it just took off and went. And so, I mean, it's probably safe to say somewhere around like May 31st in that area is where I've been in at. And so I've been in it this whole time, or maybe it was somewhere around in here. I don't know. But anyways, either way, April 16th, I think that's where it was. So I've been riding it since then, but it's following this trend line, and it's going to keep going up to about $12 to $15. $12 minimum value by the middle of this year is a reality, So it's still not too late to jump in on this, is what I'm trying to say. You still have time to get in. I've still got 5 option calls in it. I'm riding for free, going up in it. I've made double my money on it, and I'm still riding 5 option calls for free, and it's supposed to go up another $4, which means it's going to print $500 every dollar that goes up. So I should be making another $2,000 on this before the end of if it goes all the way up before the end of my option call. I do plan on getting back in on this on a dip down, and so I'm going to be watching it closely. So if you tune in and you watch my charts, you'll see the dip down. You'll hear me talk about it, and that's when I'll be getting back in on it to ride this up, because I'm going to get at least $12 out of this thing. And so if I got to put it in for another a month or whatever, I mean, so be it. It's a guarantee. It has to go up. So now don't put that on me. Don't listen to me. I'm not a professional. I'm just some idiot that bumped his head and sees things and hears voices. So don't listen to me. But that's what I'm going to do. And so, so that's 2 right there you'd be in the money on this week if you had listened to me and followed me on this, or followed me on TradingView. I can't wait for it on TradingView. It's in the profile down below. It'll be on the recording that I post as well. So if you're watching this, a little bit later, that's fine. Now, let me take a look at this right here. All right, cool. Let's go to the next one. So EMBL, which is the counterpart to ET. And EMBL is the one that was net valued at $2.7 billion. A lot of rumors going around that were worth way more than that, like double that. And so then ET took a look at them and valued them at $7 billion and said that their stock, they just bought them. They said, oh, yeah, we're buying this. We're done. Let's go. And so they bought them. And I got in somewhere down here, same place, right here probably, right when it nestled into this little crevice and pulled back. It was a perfect time to get in. That was April 16th. So there you go. Hit play. Now I want you to watch this. It comes up here, hits its head on this area right here and busts through it. So now this curving action right here and this pullback right here and then another pop up right there. This is the slow ride up right here, curving action down here, and then a pop up right there. And so this should be over here. And then you'd be looking at clear skies from there going all the way up to $12. When I jumped in on this, it was $6.75, so it's going to go at least to $13, $14. So it's still not too late to jump in on this trade. Sitting somewhere around $8 and some change, $8.39 at an all-time high right now. And you might see a little bit of a pullback right here, into this area, probably coming down to the $7.95 area as it, then maybe it starts to barcode sideways and then comes up, pops out. I'm not really sure. I would have to redraw this to see, but I'm fairly confident that this is probably what's going to happen on it. Now, so that said, if you played this stock, it moved up from 687 to 848. So that's $2. I got it in the money. It's been printing. I had 8 option calls on this. I sold 4 of them, and I'm writing the other 4 for free. So there's another. That's the third one that was in the money for the week. So let's take a look at RRR. Now, some of the predictions you might find on my ideas page probably didn't come to fruition. But what is the rule for that? The rule is that if it doesn't respect the trend line, we don't play it. Again, I'm not Nostradamus. I'm not predicting the future. I'm just drawing trend lines. If it respects my trend line, then I make it an attempt to play it. And that's it gives me a reason, a non-emotional reason to play it. And so that makes it very mechanical. And I've learned that mechanical trading is the most profitable trading because it takes the emotion out of it. It either is or is not. That is it. There is no middle area. It is respecting it or it is not respecting it. That's all. All I want is some RESPCT, That's it. Give me some respect, and then we'll freaking go. And so now, this is Red Rock, RRR. It's one of my favorite stocks because it runs just like Home Depot. I call it a thoroughbred because on divergence plays, this thing goes. You find divergence in the market, and it's like a rocket ship. And so that's what I found on this is you rarely ever see this come down to the bottom Bollinger Band, but when it does, it goes. And so start looking for divergence whenever you see a stock going in, coming down to the bottom Bollinger Band on one of these stocks. And so I have a list of thoroughbreds that I follow. RRR, Home Depot, and Goldman Sachs are your top 3 that if you're getting into options play and you're looking for a divergence, those are the 3 that I say that you only play ever until you get a hang of how it works. And so now divergence is just finding the lows with a gap in between candles here. So just connecting the lows to see where the trend line is pointing and then looking for it to be different on the MACD and the stochastic RSI. And if you need to know what my numbers are that I'm using, because I'm not using standard numbers from MACD and stochastic RSI, You can find that in my simple option strategy video that's in my videos on my YouTube page. You can find it there. It's very clear, cut, dry, simple, very simple option strategy. If you're just getting into options, please take a watch, look at that video. I mean, it was passed down to me by a millionaire friend who plays option calls, and he said, this is how I do it. It's the safest way to play the market. And so that's one of the ways that I play the market. And then there's some of the ways that I play the market that I add in there. But his way is truly, I mean, it's a very safe way to play. And so that said, this had divergence on it. Price action was pointing down. Stochastic and MACD were both pointing up. And so just like in this picture right here, I got in on, I believe I got in on this candle right here. And you can find this late and still make money on it. That's what's great about these. As long as it doesn't pass the last high, you can get in on it. But I got in on this candle right here. So it was here. It was showing divergence. Before any of this, before even that green candle formed, I saw the divergence. This is how strong these plays are. I saw the divergence. I scrambled to sell some of my options and stocks that I had to close them out because I was just like, I need to get this money so I can get at least 2 of these option calls. And then I got some outside of the money, out of the money calls for $40. And so it wasn't exactly where I wanted to be, but it was what I could afford at the time. And like I said, I'm starting off with a very small amount. And so I got in on that. The first day of trading, it jumps up $3, I believe. Yeah, jumps up $3. It almost, I mean, it doesn't put me in the money, but I mean, it puts me in a very good spot instantly. And then it gaps up the next, 2 days stall, and then it gaps up the next day. It gaps up the next day after that. It gaps up the next day after that until it's way up here, And then I should have sold right here, but I held on to it because I wanted to see if it was going to correct and come back and go longer. But it didn't really, it took too long to do that. And so now I'm getting into my last 2 weeks of it, and so I wanted to find an exit point. And so I waited for this to get back to this area over here, and I sold one of my option calls of this to cover my cost on this other one down here. And so I'm riding this for free on one option call. So if this decides to keep going, which most likely will, because that's why I call it a thoroughbred, because this barely ever comes down off the middle Bollinger Band. It usually just rides the middle Bollinger Band to the top Bollinger Band and just goes at a 45-degree angle up. Just like Home Depot does. And so, again, if you would have played this call, you'd be up 200% on this one here. So that is my 4th option play that I made money on this week. And now this one hasn't made it into the money yet, but it is glimpsing it right here. And it will be in the money probably in a week. So I still have an option call for that playing as well. That's going to go into it. So now let's take a look at some of these other ones. As we move up, let's see. So now Nike's stagnating, I think, a little bit. Let's take a look at it. But as the COVID rules lighten up and people start to mingle again, plays like Lululemon, Nike, let me think, Abercrombie and Fitch, Capri Holdings, Levi, Gap. These companies, you'll start to see their stocks moving up because as people become social again, they're going to stop wearing their pajamas and actually start wearing clothes again. People don't get dressed up for themselves usually at their house when they're not going to talk to people. I mean, I do sometimes, but that's just because I run out of like my pajamas and stuff to wear around the house, and I kind of want to feel like a person again. Sometimes, not all the time. I mean, the only reason I get dressed up is so I can, I guess feel alive, or hear the voices say, "Hey, you look good." No, I'm just kidding. So this is Nike. It's kind of nuzzled down into this little area down here, riding this support line down here at the bottom. Let's hit play on it and just see where it's going. It did spike up here, and so we're still in the early phases of it. But had you jumped in when I said, hey, this was going to go up, I started at 137.81 and it's at 139.51. So had you bought it in the money or near the money, you would be in the money right now, riding for free with a ceiling of 156.36, $20 run. It could be a $20 run. That's the potential of this stock. And so if you're not jumping in on this play, you probably should think about it, because it's not too late to go ahead and jump in on this play. It gapped up. The most it can do is come back down, maybe touch this gap a little bit, and then turn around and go right back up, you know? So if you're afraid to jump in at where it's at right now, I mean, you can wait for it to come back down to the 135 mark and start looking for turnaround signs to go back up. But I'm pretty strong on this, that it's trying to break through this area right here. It's probably going to gap up again on top of this area, so it doesn't have to come back down. Find support on top of this 137.73 mark, and then turn around and go long. And so that's what I'm seeing with Nike. So again, there's another one that's 5. If you would have jumped in on this play last week, like I said, here it is, 4/30/2021. I put the dates on here. I'm not fucking around, okay? I'm not, pretending like I know what I'm talking about or anything. I'm not, saying, hey, just because this is this and this is here because it did this, and I'm not using super sneaky, what is it, indicators or anything like that. I'm looking at price action. That's it. Now when I look at divergence, I use MACD and stochastic RSI, but that's the only time I ever use it. That's for the easy win. These other ones are just predicted. These are trend lines from the past that I'm using to predict where it's going to go in the future. That's all I'm doing. It's nothing, top secret or anything like that. Now, is there art involved with that? Yeah, absolutely. Is it a visual thing? Absolutely. You're going to have an eye for it, because you put it in the wrong place. You pick the wrong spot on the chart where you're replicating, and it does something completely different than that. Then you're going to kind of feel like you missed the boat and that this doesn't make any sense. So I see things, things speak to me, and that's why I'm picking the way that I pick them. And so that's why they tend to run the way that they should. I don't know how to explain it, but if you want an easy way to find out what's going on, just follow me on TradingView and look at my ideas, and you'll get all the answers you need right there. I do all the work for you, okay? All you have to do is just follow me on there and look at my ideas. If you got questions, you got a stock you want me to look at, put it in the comments below. Each one of these has a comment section. It's amazing. I mean, I know it's crazy. Technology these days. I bet they put a man on the moon one day, So, moving on. So, we got ATVI. I love this. I love this one because ATVI looked like it was going to die. Look at it. This is the scariest thing any person wants to see. So I call this God's finger. When it comes straight down like that, it's just a red finger coming down, pointing, just, I mean, kill you. It's just like, just jump. Don't jump. Please don't jump. But you did, and now you just hit the cement. So with Activision, I predicted that it was going to hit. It was going to hit 94.80. And then I drew this support line down here, the buy-in at 88.77, and a support line right here in case it came down for a low. It bounced off of it and came down. So here's what happens. Watch this. Now, Activision, just so you know, this was on 05/04. And so in 2 days' time, and this is on a 15-minute chart. I usually don't do them on that kind of time frame, but Activision bought Ultima Online. Ultima Online was the first MMO ever. EverQuest, WoW, all those came after Ultima Online. Ultima Online cracked the door open on MMOs, and they were on dial-up. And it was, they had thousands of players playing at the exact same time. It was an amazing game. I love that game. And Activision Blizzard bought it and turned it into a pay-to-win game. Ruined the game. It's still going to this day, but the population's dwindled down to almost nothing. It's garbage. Nothing like what it used to be. But that said, they do have a nose for making money. So get in at 88.77, hit the play button, and guess what you find? Lo and behold, maybe, coming, they're going to make you wait for it. Boom! Oh my God, look at this. So, one, here's what I find very interesting. Look at these trend lines I drew right here to say this is where you get in at 88.77. Look at this trend line right here that I drew before it even happened. It gaps up. It gaps up to jump up to this trend line and go up from there. It's the most ridiculous thing ever. It literally jumps the whole thing. There's no candle here. I can put my hand through it. Like I'm sliding my fingers through it. Like, look, it's like a magic trick right here. So it gaps up to the next trend line, creates this massive green candle, gets up to this area, draws back, taps the area that I said it was going to tap. 94.80, draws back off of it. Guess where it finds support? On this trend line right here, wicks down to it, goes back up, rocket ships all the way back up, does this reaccumulation run right here, and then bounces back up into this area, hits it again, pushes through it on the third time, finds support, and is getting ready to go back up. Can it stay up here, or is it going to come crashing down back into this area? I think it's going to keep going up, And so that's what I want to see. Is I want to see it create support up here and keep going up, because that's ludicrous. But had you played this, you could have played it, rode it all the way up to 94.80. Could have put your take profit at 94.80, right? It would have ran up, took profit, and you would have made a $6 run. Yeah, a $6 run. Could have waited for it to come back, hit this area right here at 89.55, and then made another $5 run. So you could have done 2 option plays and cashed out on both of them. And if you bought them near the money, you would have probably made somewhere between $500 per option call, on one option call. So you would have made $1,000 playing both of them on one option call. And you knew it was cheap because, look at this. It was dirt cheap when it came down here and started looking like doo-doo. So you could have bought 10 of those and made out like a bandit. $5,000 each run. Boom. Boom. Say it. Boom. So, Activision. Great play. Wow. Let's take a look. I don't think Apple is there yet, but let's take a look at it. You know what we say, if it doesn't play like we want it to, then we don't get in. Okay, so there you go. Bounces off support right here. It drew this little yellow support line. So I drew the green one as this is kind of like your bottom end, but then I drew this yellow one as a little bit more of an aggressive one because I felt like that it might actually stop a little short of that. And then I also drew this trend line right here coming down the white one, going across like that as another means of I think this is the absolute 2. So the cross section of those basically is almost right where that is. Bounces off, it comes back down, checks it again at an angle right here. So this trend line is just slightly too low. If I moved it up to where this gap is, and the reason why is there's a gap down here. If you look at the candle that I'm connected to, right after that candle, there's a gap up that's pretty much almost exactly the distance between this and that candle. And so if I was to close this gap and put this trend line on the bottom of this candle right here, it would be right across the bottom of these candles. All right, so nuances, who cares? it's following the trend line. So it checks it, bounces up. One leg up, clear to go, gap up again, comes down, still doesn't close that gap completely. I mean, it does it with the wick, but closes above that area right there. Good to go. Starts the next candle, probably another gap up, and takes off from here. Clear skies all the way up to 149.57. So from 130 to 149.57, we're looking at almost a $20 run on Apple right here if you jumped in. So is it going to hold? Is it going to go? I don't know, but it's doing everything it can to let you know that it is. So we'll see. We will see. So Apple right now sitting pretty kind of pretty. You wouldn't really have gotten too much money out of that one, but you would be sitting kind of nice waiting for that one to kind of go. And obviously you wouldn't have it ending in this month. You would want, so on my option calls, you're going to want at least 25 working days on any option call. And I wouldn't take anything less than that because it takes roughly almost 30 days to complete a rotation if it does take a downturn. So technically, I kind of lean more towards anything 30 plus. Anything less than that, I kind of get iffy on. I don't really like it. And I don't want to sit in it that long, but I like to prepare just in case it does go down for whatever reason, because going down is a healthy thing, but it does take time. So therefore, you might lose 2 weeks out of your run. And if you're trying to get out, you're starting looking to get out 2 weeks before your option call ends. That's cutting it close. It goes down for 2 weeks and it comes back up for the last 2 weeks. You got to start checking out sometime in the week that it starts to go up. So therefore, you're not really. You might even break even if you're lucky. It might make some profit if you're lucky. So that's kind of what you're looking at there. So I like to look at 30 plus. That's just how I roll. Some of you like to find these very volatile ones that pop in the same day and get out, and then it kind of run the risk of day trading or whatever. Maybe you have enough money that you don't have to worry about that. I don't know. I don't care. But me personally, I'd rather just have enough money where I can play option calls in a safe way, give myself 30 days, and just play other option calls that are going to make money in the meantime while that one's stagnating. And I'm okay with that because I feel confident enough that it's going to turn around and keep going up if it respects the trend line. Now, if it stops respecting my trend line, I get out. If it's not respecting the trend line, if I don't get any RESP, ECT, I get out. Okay? That's how it works. It's a mechanical response, not emotional. You can't make money on hopes and dreams. You can only make money on what's actually really happening in reality. And so if you trade in a mechanical way, you stand to make more money because you're not emotionally tied to it. And so that's what trend lines do for you. But the trend lines most people draw are stupid. I'm sorry. You're drawing them wrong. You can't just find a bunch of bodies of candles and just draw a price act, a line across the bottoms of those candles and think that that's going to work. It doesn't work like that, because here's what you're doing. You're basically drawing the psychological line, what you think that price action isn't going to go past, and then you're making your decisions based off that trend line. But in reality, what's really happening is institutional buying is seeing that trend line and saying, well, there is a shitload of liquidity down here, contracts and stop losses that can be broken if I just dip past this trend line. And so guess what they do? It's part of their process is to break a trend line that's been created over X amount of time, because it's going to give them a larger pool of liquidity or contracts that are going to be broken, that are going to free up those shares that they can gobble up to soak up the float so they can have more control, so they can take it up and ride for free, because retail is going to start fighting over what limited amount of shares that are left to drive demand up. And retail rights or institutional rights are free while retail does that. So it's all part of their plan. And if you're not following that, if you don't see that in the market, you don't understand it, then maybe you should watch some of my videos that are on my YouTube, because it'll explain it for you. Or you can just follow my charts, because it already takes all that into account. I've got it covered for you either way you want to roll. So moving on. AMD. I see a lot of potential in AMD, and I think it's gonna go. This is what I see. AMD, I hit play on it. So it still hasn't started off into its move yet. It's still, so this is a 4-day candle. So you're not going to see anything until it ends, this 4-day candle. So, or I'm sorry, it's a week candle. So that means on the 10th, you'll get a new candle here. And this is probably going to stagnate out until the 10th. So you can still get in good on this. It hasn't really moved from where it's at. 78.68, I believe, or 78.81 is where it's at right now, which is where my trend line is exactly. And so that's your area to get in. Like that's this white line is your buying area. So buy in at this area. I expect it to go up at least to $90 on that candle over the next week. So a 7-day candle, you should get to at least $90. Whether you want to stay in it after that or not, I would probably buy a couple of contracts and let one ride after $90. Close out the other ones once it hits it. And so, again, don't follow me. I'm not a financial advisor. I don't know what I'm talking about. I'm just an idiot that bumped his head and sees things and hears voices. But that's probably what I'm probably aiming to do. And so, and it might be too much for me right now. I might not even play it. I do wish I could play it. But so if I looked at, let's say, the June 18th, which is your next major option call ending day, if you will. So put it out to June 18th on Thinkorswim, or I'm sorry, on RobinHood. By the way, if you're not, if you're looking to get into options, or if you don't have a RobinHood account, or if you only trade on one account, go ahead and open yourself another account on RobinHood, because RobinHood has got to be the easiest way to play options, and visually the most easiest way to digest the information. Now, you can't chart on RobinHood, but don't worry about charting because I do the charting for you on TradingView. Get your ideas from TradingView off of my charts there, or watch me on YouTube. Open your account on Robinhood, and if you need a link, you can follow my link in the descriptions underneath this video. It has my link to join Robinhood, and that can be your way of supporting me. If you feel like supporting me and you don't want to throw me, actual cash, open up a trading account in Robinhood, and if you fund it, it gives me like 2 or 3 free stocks, which are only worth like $5 or something like that. But I mean, it takes several people to join for me to get 2 or 3 stocks. So if you join, it's probably going to give me like a $5 tip. It's kind of like what it is. And so it would be much appreciated. It would help me continue wanting to do this and help people, because I do need a better system. I'm sure while you're watching this, you see the video freeze and stall, or my connection gets low and it dies, or whatever. So my goal is to get enough money to where I can get a full streaming setup to where I don't have to worry about the drawdowns, get better internet connection, get a better video camera, get a better system altogether that doesn't get crapped out over it just being used regularly, and and then continue doing better videos of this so I can help more people. And so I don't know if this is going to give me I put in the option call for this, and it hasn't updated the thing, so we're going to refresh it. Here we go. All right. So in the money is $4.33. And so that's not too bad. We're at $3.10 just outside the money, and that'll give you a $10 run once it hits 80 to get to 90. And if you look at that, if you don't know, now you know. Delta right here, the delta is what you get paid for every dollar that it moves up. And so the gamma is added to that for every dollar. So this changes as you go up a dollar, this gamma changes to another thing or whatever. So this will probably move up to like something like 56. Once it moves up a dollar, it goes up to like 56, and then like once it gets closer to the 80 mark, which is at 78 right now. So yeah, so this next dollar after this one, you'll see like 68 cents or $1 or something, something whatever adds up to $1 to be over here. And so then this will cap out at $1, and then you get $1 for every time it goes up. And so 100 option calls, basically making $100 for every option call that on every dollar that it goes up. And so if it's going to 90, then you're making $1,000 off of this one option call for that cost you $310. So $310, break even, make $1,000 on top of it. So that is that. Let's check back over here. So that is AMD, still looking pretty. Again, that's not one that would have made you money in this last week, but it is one of the calls that I'm saying that's going to happen over the next week that you should definitely pay attention to. Let's take a look at Amazon. I don't know why I tried to drag it over there. That's not how it works. All right, so Amazon, you're like, what is this mess? This is different from all the other ones. So I have my path that I normally plot right here in the yellow. And then right here, I have a red line that shows, I guess, a more aggressive bottom end of this price action. And the green line is the more aggressive top end of this price action. So you can see that it's going to bleed through and hit these areas and come back. And if you look, it's it bled through this area, so slightly behind on this prediction here or slightly forward on this prediction here. I'm not really sure which one it is, but probably slightly behind on this prediction. So just move this forward right here. This wick goes right into that area right there. This comes down, hits this bottom area right here, and basically you're tapping in. I don't know if it's going to continue coming down to touch this area, but let's go ahead and hit play and see. Yep, it's just stagnating out. So this is a 4-day candle as well. So by the 10th, it'll start a new candle, and I don't know if it's going to continue going down by the 10th and then suck back up and go up, or wait for the next candle. So probably a 2-week chart on this one. I would wait to see what's going to happen right here, if it's going to come down. But if it does get into this 31.21 area, anything within like $20 of this area, I would probably pull a trigger on, jump in, and watch this run up, because it's probably going to cap out at the 34.80 mark, and that's a $300 run. I mean, it doesn't look like much, but if I made this the size that it should be, I mean, you're probably looking at a $300 run right there. And so that's why this is so important. And you're like, oh wait, now I'm paying attention. Now, I'm not going to lie to you, playing Amazon is expensive. It's not one that I'll play. I'm not playing Amazon right now because I don't have the funds to do it. I mean, I couldn't sell everything I have and have the funds to play it. I mean, I could probably play one, but I'm not that crazy right now. Now, if this came down into this area and tapped this area and showed that it was strong rejection off of it, and then stopped right in this area right here between 31.21 and 32.40, I might get excited enough to sell off everything I have and invest in one option call to ride this up. But only if I can get close enough to the money to make it worthwhile, which I doubt. I seriously doubt. I think it's probably close to $7,000 per pull on this thing, and I don't have that kind of money. I'm not even pretending like I do. So, but for those of you that do, this is an extremely good call. If it comes down and checks this area right here, I would be strong on pulling the trigger to get in on that and run up, because I'm that confident that it will make it to that level. So now let's take a look at, there we are, running out. Got Lululemon is the last one that we have, and it's not going to do anything different from where we're at. So now this red line right here is the absolute, I guess the absolute bottom is what I'm predicting right here. And then I do this white one here because there's a gap right down here in this area, and I wanted to run it through the gap to see what it was like if it ran through there, and this price action dips down here, creates a UFO, gaps back up above this trend line, and starts running. And so that's why I made this price action like this, is so you can see if it gaps up, it's probably going to respect this trend line up here, the white, versus the red. But if it stays down here and doesn't and gaps up just a little bit, it's probably going to respect the red and the white going on opposite ends there, going up. But Lululemon is just paired with Nike. As far as the, as COVID restrictions lighten up, you should see an explosion coming out of these retail products. And God bless Lululemon for their yoga pants and the fashion trend that women love to wear Lululemon out in public. God bless them. I'm not gonna lie. Um, so they are worth every bit of 442 that I'm predicting, which would be an all-time high for them. I think right now they're sitting at like, I think the high, and I don't know if it's their all-time high, but I think the high is somewhere around like 398. Um, it might go a little bit higher. Nope. Yep, 398. So I think you're gonna see an easy $100 run out of this, $115 run out of this, by jumping in on this. And this is an extremely bullish one, but it's also very expensive as well. Probably not one that I'll play. I do wish I could play it, but just a little bit too pricey for me, I believe. Let's pull it up and take a look at it and see. And just like every time I stream, my nose gets stopped up. I don't know why. It's just something it does. I mean, it's not bad. It's not bad. 378 Lululemon for a rocket ship going to the moon. I'm sitting at 332. It's at 330 right now, so $2 outside the money. I mean, you know, it's not bad actually. But that's on for May 14th, and I'm not trying to play something that tight. I want to play at least June 18th. And if I played June 18th, that'll give me a little bit more than a month. And now look at the prices. And this is why I don't want to play it. I mean, it just goes absolute parabolic at this point. Like it's so high. 1193. I mean, now here's the cool thing about you can't see it. Let me switch charts here. Here's the thing about RobinHood. Like, if you check one of these, as you're looking at option call and you check one of these, you get this little chart right here. Watch this. If I just move my arrow over, it shows me where it breaks even at. And so if I start at 332 right here, I'm out $1,100, right? Well, it has to go all the way up to 350 before I break even. And then it shows you the profits there. Now, it's not running long enough to kind of show me any more profits than this right here, but it shows it's infinite. It just keeps going. So yeah, you can definitely make your money back on this if it keeps going up to the 442 area, if you have enough time to get it up there. And so that would be the thing, is time is always the thing that's fighting against you. So it's probably in best interest to pick a term that's going to give you plenty enough time, because it definitely doesn't do it in like 1 month. For it to get to its peak, I mean, maybe to get to this area right here, it could probably do that in, what is this, May, June? It could probably do it in 1 month to get up to the 442. But to be safe, you'd probably want to give yourself at least 2 months. And so even if you checked this guy, 370, it cost you $1,238. Now look at it. Breaking even at 382. So not the best play in the world for me, but for those of you that got the money that can get closer to the money and play it like that, it's a good run, and you'll make some good money off of that easily. So there you go. That's all I've got for you. I'm going to go ahead and publish this under the videos too, so you'll have the video and the live stream both up there. But the recorded version probably won't have as many gaps in it, because I think we lost a couple minutes there when the internet took a little bit of a blip. But anyways, my name's iCantw84it. I appreciate you for joining in and watching my stream. If you're checking this later, that's great. This still holds true. You can see the potential of what I'm doing here. I've more than quadrupled my account right now. I've only been doing it for 2 months, and I started off with an extremely small amount. of $500. And so that just speaks volumes to what I'm doing right now. I'm super stoked as a person because it's extremely hard to play the market and actually be successful. I do see things in the market different from other people, so I kind of correlate it to that. And but I'm not so arrogant that I'm not trying to share my success with everybody else either. So if you like what I have to say, if you want to learn more about my story, Google me, check out the WECT thing. If you like me to actually do a video talking more about my story, I can do that as well while I trade or while I don't trade or whatever. Just put it in the comment section below. I have no problems talking about my past, talking about what's going on with me, talking about what's happening in my head, um, and making it very public. But again, like, follow, subscribe. It'll help me tremendously in this path and wanting to continue doing this. The more followers I have, the more want to continue doing this, and the more money I make doing this, the more money I can spend in fixing my equipment so you can get better videos. So again, I can't wait for it. I do appreciate you guys joining in and watching my stream. Be safe, happy trading, happy Mother's Day, and I will talk to you soon. Hey, Savvy, I'm sorry I missed you, but I'll catch you on the next one.